I hope traders and investors alike were green on Friday. I hope you're green this week, every day this week. We put out a video earlier today that went over the earnings for this week, the econo data, Powell speaking, all the Fed speakers, going over the GPD, consumer sentiment coming in this week. So there's a lot of data information. Plus, we went over the sectors, looking for to see how the overall participation in the market, and it looks like that they are selling in every sector right now, just basically unloading. So, we've already covered that. So let's just get straight into the charts and go from here. So here at AMC, we have the head and shoulders topping pattern. This is a downward sloping. So when your symmetry is like this, it takes some of the probabilities out of the trade. The entry point for the downward sloping is actually a breach below this armpit right here. I've always, my 5 years trading experience, over 5 years now trading experience, I just never had that much luck opening, taking a trade off of the armpit, so I always still stay with the neckline. Friday we broke below, but we did end up pushing back up, so we did open back above this neckline. So I need to see a candle open up, we need to get a candle back down here and see another candle open up below this neckline. Bearish MACD. So this is the put to call ratio, and you can see we've been bearish all year, but we are at our most bearish point right now, 136. We have not been here since the COVID pandemic. This is renewable energies. They're starting to break down a little bit. We're going to look at a few charts as we go through, as we look at our charts today. So we have broken below the 9 and the 20 now, and your 9's rolling over. MACD's turning bearish. So there's so many things that are oversold, or basically oversold, very extended here. So I'm just trying to get an idea of maybe some things to play that are not so overextended away from the 9s. So this is the oscillator for the Nasdaq, and you can see we're 437. Very, very hot down here, and I just want to take 1 minute. I posted this, but let's talk about it in the video real quick. So this is a 20-year look at the same oscillator. So you can see this is the COVID pandemic, but we have not been this oversold in the Nasdaq in over 20 years. So right now, this is a very big deal, very big deal. And you can see we are you can see clearly, very, very oversold down here. It's hot down here. So we can definitely, see an oversold bounce. And I don't mean all new high bounce. I mean just to get us back up closer to our 9 on our daily. And we'll look at the SPY chart when we get there, and I'll kind of tell you what, some areas that we could bounce to pretty easily. And that would help cool the oscillators off and just set us up for another move down. So you can see the New York Stock Exchange, not as hot as the Nasdaq. So, we're still above the pandemic, the COVID pandemic, but we are a very hot 376. The SPX weekly chart come right down here and tested support. Your Bollinger Bands are pinching. Watch for this 200. Your MACD is just starting to cross. So that can be a pretty bad sign, just starting to cross, depending on, how much momentum we can get out of this to the downside. That's a pretty bad sign right there. Pretty bearish. The US dollar is just, it was on a tear Friday, and that was a big part of the market pulling back. There were some other things going on, in the market. We get, stand tied into these news events, and it can swing the market in different directions, and it's nice knowing what's going on and understanding what's going on. We also use an indicator, so like when the market opened, we were at a negative 2400 on Friday right at market open, so that told us that we were in a trend down day for the most part. Now that can change throughout the day, but we knew it open right from the beginning that we were at a trend down day. So the VIX here has pushed up, finally breaking above this resistance level. that it's been struggling with. Bullish MACD cross there. Remember, VIX goes up, that's bullish. We're bearish for the market. This is the VIX 15-minute chart. You can see we pushed up and had this pullback here. And if you go back and look, that's exactly what, so this candle was a full candle. And before the end of the day, we can see it on the 15-minute chart that we started to pull back, and that's what pulled this candle back. Just pointing that out to help the newer traders try to understand what's going on and how to use multiple time frames and how to understand the different time frames. Light crude oil, our crude chart, big down candle Friday. So remember when Citibank said we were going back to 60 with crude? JP Morgan said we were over 100, and I actually said at the time that Citibank had been closer to the price targets and had been more have been closer on everything that they've said than what JP Morgan had. So we'll see. We'll see either way. We may not hit 60. We may not ever get back over 100. We'll see where we go. So this chart, if you remember, we haven't looked at this in a while. This chart's going to tell us the percent of the stocks that are over our 200 moving average, daily moving average, and our 50 daily moving average for the New York Stock Exchange and the S&P 500. So for the New York Stock Exchange, only 15% of stocks are above the 200. Only 9% are above their 50-day moving average. And for the S&P 500, we got 15% are above their 200-day moving average, and we have 5% that are above their 50-day moving average. Apple's still showing a ton of relative strength in this market compared to a lot of other stocks. MACD or Bollinger Bands are trying to pinch here. MACD wants to cool off, but it looks like it's trying. But if you take a better look at it, look at that bottom band. Looks like it wants to roll. So this is a rough one because there's so many people already short in this. The market makers would love to deliver max pain on all those people. AMD. This is AMD's daily chart. We had that really nice push Thursday, went right back, tested, pushed back, big down candle. Flat doji down here. You can see where we're out of the Bollinger Bands. Very tight candle there. RSI is cold. MACD looks like it wants to open up here and give us some more downside. We're extended here. We really need a bounce back up to try any type of long type trading. The way we trade, staying in short, grabbing 30, 50%. It can be more than that at some times, but in and out of our trades. That way we can get back in and grab another 30 or 40 or 50%. 10%, whatever it may be, on the next move and the next move and the next move, when we're this oversold, instead of trying to get in and play, take a longer time frame play when anything can happen, especially with all these different events that's been coming out. We've had Yellen speaking, we've had the Russia mobilization. We've had so many different things that have happened. We've had, of course, Powell speaking, and then we've had the Fed speakers. So we've had a lot going on that's been causing a lot of market manipulation. So we've been able to profit on those instead of getting stopped out. Like, say we're in a put play going very well, and then Yellen come out and started talking, the market turned and went up. We were able to trade both sides of that instead of trying to sit through one position and not getting the results that you could have if the market didn't turn like that. So you can see AMD weekly chart here. We closed below the 200 moving average and below this area of support as well. Affirm has broken below this area of support here. We were below the trend line. We've already took the trend line out. Now we've opened up below this area of support. Trying to get outside the Bollinger Band. Actually is a little bit, needs to get back inside that Bollinger Band, but we're seeing them pinch. That's telling us some volatility is on the way. Affirm 15-minute chart. You can see the steady downtrend last week. Amazon, you see the steady downtrend on the 15-minute chart. Amazon weekly, just ugly here. Very ugly. AMC 15-minute chart. Almost got a little cup action down here. Not perfect, but putting in a little base down here. Did push up above previous resistance on Friday and closed above Friday's high. Well, I guess not. I'm overlooking that wick, but closed above these candle bodies. So that's a sign of strength alone. AMD, pretty flat day. Didn't get that much of a recovery here at the end of the day. Amazon, another ugly chart. This inverted cup and handle really went to work on that pattern. This would have paid nicely. Have made a nice move down. Now we are extended outside of the Bollinger Bands. So we know we get outside of these bands, we got to be really careful. Plus the oscillators are telling us we're oversold. So we could definitely get a move back up just to bring ourselves back inside of those bands. You can see a nice downtrend here from pre-market into the day as we entered. Apple continued to pull back. Right at the end of the day, we pushed right into that daily, or the 15-minute 50. Apple weekly chart. You can tell by this chart right here, it's holding in better than so many other charts. Still showing a ton of relative strength in this market, even though it's pulling back as well. Still showing a lot of strength. Boeing, we've actually broke below. We got a rounded top here. We have broke below the left side now. Outside of the Bollinger Bands, I would like to see, as you can see, what happens here. We get outside the Bollinger Bands, we push back in to our 9. Outside the Bollinger Band, sometimes it's our 9 and 20, because remember, your 20 is your mean. That's basically your center, even though it's not exactly always center, but that's basically like the midpoint of your Bollinger Bands, and we need we're extended here. We do need a pullback. I would like to see, for me, what I would like to see is a push up at least. Of course, I would love to see the test the 9 or test previous resistance. But if we can just fill these gaps on some of these charts, that would make a nice play up to a gap fill, and then maybe see a reset up for a pull down there or a move down. Bitcoin struggling here, right in this little support zone. I mean, it's right in it, struggling. You can see right here on the daily chart for Bitcoin, I mean, you have this rounded top, exactly what you're getting here. I've been seeing a lot of different patterns from falling wedges, and everybody's trying to draw patterns. It's a very simple rounded top here. I mean, it works right out. I haven't drawn it because I got so many lines on my chart. But we will go ahead and draw it real quick. I've been seeing all over Twitter, everybody's trying to get a pattern out of this and that and everything else, and just a simple rounded top here is sufficient. It's a bearish pattern letting you know that, hey, we're bearish and Bitcoin's bearish. You don't have to be no more technical than just seeing this right here. All right, now I didn't get the chance to adjust this side like I wanted to, but that's all right. I should have, it just went ahead and set on me, but I would like to have had you can pull this band out a little bit to stay within those candles. But you can see rounded top, bearish pattern. It really doesn't have to be any more technical than that. You can see charge point here, got a possible double top, needs to be confirmed. This is your neckline, your MACD's bearish. We looked at the clean energy industry chart. It's starting to break down. So this could be a target for us this week, a fresh double top breakout. You can see the M pattern forming right here. This is what we need. We do need the pullback here. And it's not textbook. This side's a little higher than this side. It would rather be this side, have the little bit of extra height. So it's not textbook, but this market, some of your non-textbook patterns have worked the best. Chewy, another rounded top here, rounded top. See if we can get another pullback. MACD's bearish. Crowd, we're extended here. This rounded top's been working. We have broken below the right-hand side. At this point, we're on the Bollinger Band. I would like to see a move back up to the 9 to get a fresh move back. Now, I don't know if we will. This here, we don't have a gap like we do on some stocks. I mean, we're so oversold that it's going, you know, we really need to get some kind of bounce here. You can see a descending triangle here on CVS, fresh MACD crossing. We need to confirm this. So to confirm would be to break below the neckline of this pattern, or break below the resistance or support level in that pattern. CVX, big pullback here outside of the Bollinger Bands. Look how I just rolled that Bollinger Band open like that. Below the 200, you know, wouldn't mind seeing maybe some kind of pullback here, just so far extended from our 9 and our 20 moving averages, but that MACD is turning bearish. CVX 15-minute chart, you can see the huge pullback it had here. This thing pulled back almost all day long, right to the very end of the day, and got a small bounce in the close. DraftKings, we got our 1, 2, 3 pattern. Like I say, for me, it's just a high, lower high. You know, I look at it just like this: high, low, lower high, and the break of this right here is where you enter because you're expecting a lower low, and you confirm that you're going to get breaking below that level, you're going to get some kind of lower low. We just don't know how far it's going to move down, but we'll try to start calling it the 1, 2, 3 reversal, so maybe you'd be more familiar with everybody. So I'm just talking about the basic price waves. MACD is also bearish there. Dollar Tree, you got a little symmetrical triangle down here. Still got this gap above us. Just been trading in this symmetrical triangle. And this, you know, this is actually on the bottom of the chart, so it's more of a bottom symmetrical triangle. But anytime you got prices doing this, they're coiling. It's like a spring being compressed. And there's going to be a breakout one direction or the other. EMPH, this is a renewable energy name. Broke below the 50 on Friday, small candle down here, but you can see our tight dragonfly down here, dragonfly DOG. You can see the moving averages coming down quick. ExxonMobil, we pulled back. ExxonMobil did try to trend up, had a slight trend up. To me, that's just nothing but a 15-minute flag, you know, a bear flag on the 15-minute chart. First Solar, we broke below the 20 here as well. Remember, we seen that renewable energy chart. This chart looks exactly like that. This chart's probably the closest one I found that resembles the actual industry. And they probably have a big position. Anyway, bearish MACD, which has been bearish. Don't get me wrong, this has been bearish. This chart still showing a ton of relative strength, so you got to be careful with this one. But we're cooling off on the RSI fast. We could start to see this break down. There's definitely some levels here where you can find some support as well. Losing the moving average is big. GME getting extended down here. It's tried to push up off this Bollinger. Well, it didn't try. It did push back up off this Bollinger Band a little bit on Friday. The 9 and 20 is on its way down. Also, this MACD or RSI is trying to turn bearish on us. Google, you know, we are now at the new, actually under the 100. We are at a new 52-week low. This is exactly what we were expecting. Well, with this one, well, same thing. At least we're not so far extended down here, though. We're not so crazy extended from the 9. We could easily get a bounce back up and then a pullback. So if we can get a decent day, some kind of oversold bounce, look for a 9, connect at the 9 there. Something to look just like this, push right back into your 9s, find resistance coming down. Now, so this is the Qs, and that's textbook right there. So you can see we're extended down here. I would like to see a push back up, even if it's just to fill these gaps. It's not a huge gap here on the Qs. Got a little hammerish candle down there as well. Let's go back. You know, we called the move up from a bottom ascending triangle. We called the move down just from this head and shoulders pattern right here. I just wanted to point that out, which we totally got the full move that we were expecting, 6.3. Then it gave us this descending scallop. and we were expecting more downside. Q's 15-minute chart, you can see just a downtrend here. We did get that push back up Friday. QQQ on the weekly. Watch this 200 for support here. Bonds 20-year selling off. IWM weekly chart, we've broken below the 200 last week. Watch this support level down here at the 160-ish area. IWM daily, you see this big gap here. That's what I would like to see. I mean, we're so far extended outside the Bollinger Bands. It's the MACD's bearish, RSI is dipping below. I would just, just a bounce back up to fill that gap. Let them bands try to kind of catch up, get us a little bit closer to a moving averages. I mean, I would like to go up and touch them and then get another move down. That's what I would prefer to do, but that's not a necessity. You can see the downtrend here on IWM the last 2 days. Come back, tested it during pre-market and then sold again. Come back, tested the trend line at the end of the day, closed up above it. MACD, you can see the strong MACD at the end, but wearing out quick. Remember, that's the 15-minute chart. LAC, so you have a double top here. This is just these lines are old. They were support and resistance from last year, and that we actually just played right into here. You can kind of see testing the support, testing the resistance, but this gives us a double top. We have confirmed below the neckline here. This move's already been made. It is confirmed. So watch that for more downside, but once again, we're so far extended there. I would like to see this 9's way up here. Lift, you got a descending triangle here on lift. Your MACD starting to roll over. Mara, this little bear flag and move down. Keep an eye on this one this week. Coin, Riot, crypto names in play. 4 bearish moves. If Bitcoin pulls back, if Bitcoin bounces, if Bitcoin does bounce and we go after Mara, let's keep in mind that we have this resistance level here. If Mara does try to push on a bounce. Meta, big down candle here. Meta daily, bearish cross, new 52-week low, exactly what we were expecting and calling for there. MU, great big pullback here. Need to draw this line down. We have broken below the right-hand side. Just a big move down. We're not super extended from the 9 there either. Microsoft has been weak, very weak. 15-minute from Microsoft. You can see the weekly chart here. We have broken below this resistance level or support level, which now makes us resistance. We're extended here right on the Bollinger Band. Bearish MACD on the weekly. So signaling some more downside, being below that resistance level now. So it would have to fight to get its way back up. You got Moderna, got this diamond bottom breakout to the downside, extended. But look at this gap on your moving averages. That's a sign of momentum, a sign of strength. Unfortunately, downward momentum. I would like to see this 9 catch up a little bit. Just extended down here. Doesn't mean we can't trade them, but it's just hard to sit into them when we're like this. MRO, big down candle on the daily, right down to a previous support level. Remember, this line's been on this chart for quite some time. MACD's turning bearish. RSI is cold. This is the Nasdaq. We're heading for those lows, those June lows. Netflix, we have now put in a double top here. For this to confirm to be a double top, we need to break, breach this neckline to the downside. Let's not forget, as we trade on, we do have this gap resistance here. If we do decide to push up, we got to take at some point. If we do push up, we got to take that gap out. NVIDIA, it's been weak. It's one of the best calls we made this year, was to stay short on these things. When everybody else was telling you to buy, we were telling you not to. NVIDIA, you can see the 15-minute chart here, was a little stronger on Friday, honestly, than a lot of other stocks. You can see on the weekly here, we took the 200 out to the downside, once again, right on this Bollinger Band. But you can see the band pinching. That band pinching like that's letting us know that the band's going to open up as well. So not only would it be nice to get the candle to pull back just a little bit to get back inside of the band, but the band's actually going to be opening up for the candle as well. Bearish MACD cross. Oxy, big pullback here in pre-market, and then just chopped around at the end of the day. I did take out the 15-minute 50 there. The 15-minute 50 can be a pretty strong level, whether you're using it for support or resistance. Oxy, pretty bearish MACD cross here. Look at that histogram growing. PLTR, watch this support here. We did get below it at one point in time, and it pushed its way back up. You can see the 15-minute chart. We actually, Palantir closed fairly strong on Friday, was able to get right back up here at the high of the day. You can see it trying to push up in after hours, right at the end of the day. So that may, Palantir may try to move in pre-market. Keep an eye on that at 4 a.m. if you're up and you're looking for a trade. So you have PTON, Pendleton down here touching support. Touch support here, and we pushed back up. Last time, you can see last time we come down in this area, we wasn't even strong enough to make it. So we're just putting in a lower low here. If we lose this support, I'm expecting another move down. I know there's a lot of people, that's another stock that a lot of people particularly, are fond of, but, it's nothing personal. Chart saying that it's time to look at it with a different view. So this is a 1, 2, 3 reversal that I tried to get out last week and missed it. The next day it broke down. I was unable to get the video out on Wednesday, so that's why we did it on DraftKings. All right, you can see Rivian here. We posted this cup, and we were hoping that this was just going to be a handle and push up, but unfortunately it has taken that out. So if you look at it, this is an M pattern right now. So basically, we've put in a double top here, but we got to confirm this double top by taking this neckline out. The 9 swooping down. So this is one that we can keep an eye on. Definitely looking for some short side to come. If we take this neckline out, we got to take that neckline out. You can't open puts here. That's not the proper way. I know a lot of people, be like, well, if I buy now, but what if it doesn't go that way? You can see Roblox, you really have the, I just call it a lower, a lower high, but 1, 2, 3 break below. That's your entry, expecting a lower low. High, low, high, lower low. At 1, 2, 3 neckline, or entry level. It's not really called a neckline with that pattern. The SPX daily, ugly down here, almost testing these lows. CRM, Salesforce, ugly down here. New 52-week low there. Snow. This is kind of a rough. If we take this level out here, I'm watching the 50 here. If we can take the daily 50 out here, I'm going to call it a double top. I would like to have had price action through here instead of this gap to form a better M pattern, but we're going to call that a double top. If we take that 50 out, we got a bearish MACD. SoFi trading. Friday was pretty choppy with that one. You can see the downtrend, but Friday was pretty choppy, and here you can see why. We come back down, touched a previous support level. Every time we get here, we see a bounce. We're so far extended here, we could possibly see a bounce. I don't know how strong, but we could possibly see a bounce here. We are at a major support level where we have bounced before. SOXS, this is a semiconductor that you go short on or you buy. So if you buy this, just regularly buy shares or calls. If you're bullish here, then you're actually bearish. If you're bullish on this stock, that means you're bearish on semiconductors. You buy this when semiconductors are going down. This is a nice day trading vehicle and allows traders who don't short or use options to still make money in this market. Bullish MACD. The diamond, you can see this is that downtrend chart, but either way you can still see the descending scallop here, moved up, moving down, outside the Bollinger Bands, extended. Ugly MACD there. Looks like that goose, except, this time he has his head in the water, and I need to start drawing eyeballs on it, but he has his head in the water, his bill open, he's fishing. So a lot of times the goose has his head up, looking good, coming this way, which is a bullish look. This way is bearish. Also crossed through our zero line, pinch, tried to pinch. That's even another bearish sign, that pinch there. That's why I talk about it as a goose head and make a like a case for this particular MACD pattern, because it gives us a pinch, which is a renewed kind of like a momentum renewal. Usually you see a move like this that give it some time to cool off, and then another, give the price action time to cool off, then you get another move to the downside. So, I just don't talk about the MACD regularly. I try to point out different little patterns that it has, and use some comparison. That way it'd be helpful and easier to remember. You can see the SPY coming right down here, testing this 363.02 level. This is actually a zone from this line to this line. I believe it's 163 to 162. I believe it's a $1 zone in there that can act as a support level. SPY monthly chart, looking ugly. September so far, we're still not done yet. This 50-day right here, or 50 monthly, is definitely in play. It's something to keep an eye out for. We have our weekly 200 as well at 347. If we lose that, we'll watch for that 50 on the monthly. So 347, 341 on the monthly. So it just gives us some more targets. You can see down here we are extended. Once again, I would like to see a pullback at least just to fill that gap, to give the 9 time to catch up. But there's that upside down goose head with his beak open in the water, which it's just basically showing us this pinch. It looked like it was going in for a cross. You got a fake out, which give us a nice pinch to give the MACD or price action time to cool off, and then rip to the downside. SPY, big downtrend there. This is our trend chart. Short term, long term, medium term trends are bearish right now. Not surprised. Square, back down here to the lows. I should draw that and see if that's a support area there. MACD's bearish, and you can see the head and shoulders pattern on that chart. Tesla's been pretty tight here, finally starting to try to break out of this area. You got a doji morning star here on your weekly chart, so that could be giving us a signal to the downside. You can see we're trading in. You draw a line from there right through here and look at this as a broadening wedge. I'm just looking at it as a test of support, and we're coming down, or test of resistance. We're coming down to see if we can take support out and look for shorts down here. MACD is just turning bearish on the daily. Also, you can call that what I would call 3 red crows as well. Got your gaps, gap right below the 50. Downtrend here on Tesla's 15-minute chart, big downtrend there. This is TSLQ. This is a inverse ETF that you can go short on. I do not recommend options on this yet. I would look for liquidity. I don't know if it has enough liquidity or not, to be honest. But you can go short here if you are bearish on Tesla and you're not shorting stocks and you are not playing, trading options, then you can use this as a trading vehicle to help you go short on Tesla. So you can see a possible double bottom. We need to confirm the neckline. Histogram bar, put a note on a histogram bar. Look at it growing. Nice MACD cross turning bullish as well. Twitter just hanging out, waiting on that trial. Uber, we talked about this as a not so textbook double top. Now we had this inverted cup and handle, which played out nice to the upside, retraced over 100% of that move. We're sitting right on this neckline here to confirm this double bottom. MACD's bearish. We are extended from the 9, but we're below the 50. UNG, pretty ugly here. You can see we were watching this head and shoulders topping pattern, big down candle. We did push back up. You can see where we gapped down, and we did push back up some Friday, trying to recover some of it from Thursday's move down. And you can see it push down, back down at the end of the day. Upstart, you have this descending triangle here, breaking below. Chart we talked about last week, a pattern we talked about last week. You can see Friday tried to, showed some relative strength in this market on Friday compared to a lot of other charts. You can see UVXY here breaking out of this not so textbook. These two candles down here, this would have made a nice bottom ascending triangle, but those two candles invalidated that pattern. But either way, we're breaking above resistance here on volume, moving on, expanding volume. Wells Fargo weekly chart coming back down. Right now we are testing our 50, or is that our 200? No, I'm sorry, that's our 200. We're testing our weekly 200 now. Your MACD wants to roll. Watch to see if we hold this 200. If we lose that, watch for this support. You can see some support right here on those candles. We get below that 50. You can see how when we got below the 50 here, it did act as resistance. So expect the same if we get back below it. You can see Wells Fargo here on the 15-minute chart. Big pullback. A nice push up here at the end of the day, though. Very nice push up at the end of the day. Like this kind of looks like that goose head, upright, crossing the zero line. So here we are crossing the zero line. Some traders look for a bounce back to the zero line. I kind of like to be crossing the zero line myself. So that could be a reversal signal there. See if this crosses and wants to roll back over. Now remember, that's a 15-minute chart, so that would be a short-term reversal, and most likely it's probably going to roll over. XLF, I actually meant to take this one out. We've already talked about the sectors. ExxonMobil. Big move down here Friday. Look how big that gap is. It just gapped right down. MACD turned ugly, very bearish there. Big gap down. We're extended. Would not be surprised. We are below resistance. I would not be surprised, because this is where that candle closed, for this candle to push back up and retest that resistance. It's exactly what I would like to see. It would give our moving averages a little bit of time to catch up. And that puts us back to AMC, our first chart. Let's get in here and make some money this week, guys. Let's just, discipline. It's going to be needed with all the data coming out this week and the Fed speakers. So we will have all these guys on our radar, and we will be on it. Use it to our advantage. Have a great night, and I'll see you in the trading room.